What's up guys, my name is Andre and in this video we're going to be covering the initial bounce breakout report by retracement on edgeful.com. So let's start out and explain what is the initial bounce. The initial bounce is the high and the low of the first hour of the session. So by session, I'm referring to the New York session right here. And just so you know, on Edgeful, whenever you have a session selected, you can see these blue boxes here are the New York session. You can see 9:30 to 4 p.m. Eastern Time. These boxes go from 9:30 to 4 p.m. Eastern Time. So it's very important that you understand that you are filtering the data only for the price action within these boxes here. So the initial balance is going to be the high and the low of that first hour. And you can see we have these blue boxes and we also have this IB indicator that will automatically plot for you the high and the low of the first hour of every single day. If you want access to these indicators, you can go right here on Edgeful and you can click this button. You're going to see we're going to ask you to put in your TradingView username. That's right over here. The way you can find that is at the top left of your TradingView app. And then you're going to see right over here, my username is Edgeful, yours will be something else. Put your username in right over here, and then you'll see in your TradingView, in your indicators section up top, the invite only appear, and you're going to see all of these indicators. The one that we're using right now is the initial bounce and the market sessions right over here. So you can see that the high and the low here is the first hour of the session from 9:30 to 10:30. If you're using the London session or you're using stocks, it is, in this case for stocks, it's 9:30 to 10:30. If you're using Forex, it's 9:30 to 10:30 for all the sessions. Now, if you change the session to the London session, that's where everything is going to start to shift because the London session starts at 3 a.m. and this initial bounce goes for the first hour. So it will be from 3 to 4 a.m. If you use Asia, it's from 7 to 8 p.m. So it's really important. It's always just anchored to the first hour, and it is the high and the low of that first hour. So let's say you want to look at London here and you switch over here to London. Then what you need to do is go to your settings and turn on the London session for the market session so you can see the correct outline of the London session. And you also have to make sure you update your initial balance indicator to be from 3 to 4 a.m. So now this, So now this is your London initial balance right over here. So it's really, really important that you understand what sessions you're looking at. I'm going to put back on my New York session and I'm going to put back on my standard reset. Put this back 50 days. And then now let's jump into what this by retracement report measures. So we want to make sure that we're looking at the New York session here. And by the way, what happens in Edgeful, if you change this to New York or create a custom session, it is not going to change your TradingView. You need to make sure that you update your TradingView separately. You have to remember that. Now, this report, first off, we'll only look at single break days. So when price only breaks out to one side of the initial bounce. You can see here it broke out only to the top side, and that is a breakout day. And then over here to the right, we have breakdown days. So in this example here, we're looking at this breakout day. This is the box that we want to look at. And so starting out, it will not consider a double break day and it's not going to consider a no break day. It is only considering single break days. And what specifically it's looking at is after the first candle breaks out of the IB, how far back into the IB will price typically go while still being a single break day. So you can see we have these three levels here: 25, 50, 75% retracements from the IB high, because this is the breakout example here. So if you go to the settings of the indicator and you click 25, 50, and 75, it is automatically going to plot out for you the midpoints. So in this example here, this IB is 32 points. The halfway point is 16, which is obviously half of 32. The 25% retracement is 8, which is 25% of 32. So regardless of the size of the IB, this is what it will always be split out evenly into 25% increments. Now you can customize this down here. You can come down here to customize the retracement levels you want. You just have to make sure that you update this accordingly. So if you change this to be 15% level 1, make sure that obviously you change this to be 15% to match. Now, what you can see here is that 62% of the time on a single break day to the top side, price is going to retrace back down to this 25% line, which is right over here. So if you want to trade a single break and you're more of a day trader, you're not looking to scalp a move like this, entering or waiting for your entry at this 25% retracement is a very high probability area to avoid the drawdown if you were to have entered over here. So if you're looking for a bigger move up, you don't really want to be entering at the break because you know that 62% of the time price is going to fall back into the IB while still being a single break day, which means that it's not going to do this. So what we want to expect here is for price to do this, right? So, and then now looking at these other 2 points, you can see that only 24% of the time price has touched the 50% retracement while still being a single break day. So this is a great place to invalidate your long entry, your long trade idea, your breakout day thesis. Now, it doesn't mean that you need to put your stop directly at this point. You can move it around and give it a little bit more room to breathe, depending on the volatility or whatever else. But this is a good area to start to invalidate your long trade idea. You do not need to put your stop all the way down here. And a lot of people will see this and think this is a great spot to add. But actually, the way that I would interpret this is the opposite. Out of all of the bullish days, which are all of the breakout days, only 7% of the time has price done this. So let me move that. Only 7% of the time has price done this. Or at least not broken out to this bottom side. So if price comes really close to this area here, this 75% retracement from the IB high, so again, that's 75% of the IB range from the IB high. So the IB is 32 points. This is a 24-point move down from the high. You don't really want to expect it to reverse at this point because that has only happened 7% of all of the days. So probably if it's gotten to this point, it's probably going to break this, which is invalidating your bullish trade idea. So the way that I think about this report as a whole is I want to see a very big first bar and 2 very small following bars, because that gives me a great place to enter and then also a very good place to invalidate my trade idea. Now, we have a bunch of other reports that you can use to, so let's say you want to use this 50% retracement as your stop. What I actually recommend is going to the buy levels report right over here and checking that for your targets. So you can go and watch the video there, but pretty much very quickly, one of the great ways to use this here is to turn on your levels. And now remember I said that the initial balance is 32 points here. You'll see that the levels I just turned on made these 2 green lines appear. From the IB high, 32 points upwards is this one-time extension. And then if you go to that buy levels report, you're going to see how often price will get to each of these points. And what I recommend is that you filter it in the customization for only breakout days. Go to that report, watch the video, understand what it's doing. This is a great setup here to have data-backed levels. Now, the same thing applies to the downside. Almost 67% of the time, price is going to retrace back in from the downside. So I will go over here. I'm going to look for this downside example right over here. And I'm going to turn this off. So here's another great example of how this looks to the downside. Now, price broke out. So again, we're waiting for the first candle to break out. And then now what we want to expect is for price to retrace back to that 25% retracement. And then now we continue downward. So 67 almost percent of the time, price will come back and touch this point. And then in this case, 40%, which is definitely higher than on the bullish cases. On the bearish cases, 40% of the time, price will reach this point here. So maybe this is on the bearish days, you leave a little bit more room to breathe. But then now you can use the buy levels report to target extensions to the downside. Now let's talk about some of the customizations quickly. So this here is how you can change the IB time frame. So you can see this is the first hour. This is the standard initial bounce. This is when you hear initial bounce, you think the first hour. This is actually very important to understand, the by wick versus by close. If you have this by wick, so let's go back to that other day here. That other day, where is it? Right over here. So you can see here, and it wouldn't have made a big difference on this day, but you can see here we have the by wick breakout criteria selected. That means that if any candle, when you have this selected, this candle time frame is not considered. If you change this to candle close, that's when this candle time frame starts to get considered. Because if you say I want to wait for a candle to close outside of a certain range, okay, on what time frame? A 5-minute, 15-minute, 30-minute? It's important that you understand that which candle time frame you're using. So looking at the by wick, the candle time frame doesn't matter. But when you change it to candle close, now you're waiting for a 5-minute candle to close outside of the range to count as a break. So in this example, it wouldn't have mattered. But if you use by wick, this is the candle here. That would have been the one that would count the break. You can see right over here, there was the wick. It did wick out. And then immediately after this candle, if you use the buy close on the 5-minute time frame, would have been the one that would consider it the break out to the top side. So in this specific case, it wouldn't have mattered too much. Let's go back to that other one. Let's see if there was a decent example here. Not in this case. Let's see if we can change the time frame. So I'll try to just find a quick example. Okay. So in this case here, when you look at, so this is pretty important actually. If you are using the breakout criteria as a candle close on the 15-minute time frame, there was no candle here that closed below the IB low on the 15-minute time frame. So this gets categorized as a breakout day, not a double break day. Really important that you know that. If you want to understand more details about that, go to the standard report and watch that video. But the customizations do have a pretty decent impact, to be honest. I like to leave it to the wick just because it is more simple for me. I don't have to worry about the time frames. If I want to go from a 5-minute to a 15-minute, I don't have to worry about anything. But the IB size, this is filtering only for days that have an initial balance of a certain size. So if you know that you only like to trade smaller IBs or larger IBs, this will filter the data only for initial balances between 0.2 and 0.39%. And that is from the IB high to the IB low. So you can see this one here was 0.86. And then here, I'll try to find another example. These are all pretty big, but go to my measuring tool, go to the IB high, go to the IB low, and then you can see this is over 1%. So the IB size is going to change how things operate. And then finally, we have the retracement levels. You can play around with these. It doesn't really matter what you do. Just make sure that you remember to check on this. And also always click save when you change your customizations. So if you X out, it's not going to save. Your customizations are always down here. So this report is actually one of the most popular ones we have right now. It is one of my favorites, to be honest. And you can see right here all the actual days. And then this table will tell you how far back into the initial balance price went. So very quickly, you can see that on this day here, the initial bounce range was 44 points, and then price retraced 14.75 points, which is roughly 33% from the low. So from the low upwards. So that's one thing just to mention. You can filter and sort this table. And if this video is helpful, which I really hope it was, please subscribe to our YouTube. And if you have any questions, you can always reach out to us right over here. We'll answer you as soon as possible. I appreciate you. Have a good one.